Hello and welcome. Yesterday, the European currency continued to gain value against the US dollar and reach another resistance level at 1.0736, despite its overbought status, according to many indicators. Statistics on business activity in manufacturing and services industries of the euro area released yesterday met analyst expectations. Nevertheless, indicators point to slower economic growth, which is likely to limit the euro's further upside potential, especially following comments on a possible end of the European Central Bank's interest rate hike cycle. As for the British pound, data showed a sharp slowdown in UK business activity. The manufacturing and services purchasing managers' indices stood at just above 50 points, which means that Britain's economy is on course for an unprecedented counteraction. Against this background, the pound sterling collapsed by more than 100 pips. Speaking of US statistics, the indicators were also in line with economist focus. Notably, these data do not support the green egg, although the euro-dollar pair failed to close above 1.0736. Today's macroeconomic calendar includes data on Germany's gross domestic product for the first quarter. I think the indicator will meet market expectations. Thus, this report is unlikely to have a severe impact on investor sentiment. In addition, some ECB members, including ECB head Christine Lagarde, are set to speak today. In the second half of the day, US Federal Reserve Board member Lyle Brainerd will deliver a speech. Furthermore, traders may take notice of US durable goods orders. However, the April indicator will hardly affect the quote's dynamics. The focus of market participants will be on minutes of the third meeting. At the same time, the stance of the central bank is clear. Therefore, a spike in market volatility is unlikely. Now, let's consider the euro-dollar pair from a technical point of view. Bears are expected to try to protect the level of 1.0736 on the hourly chart. A false breakout or an unsuccessful attempt to grow in the first half of the day will create a sell signal. In this case, the euro will slide to 1.0687. If bulls are able to gain control of this mark, it will be possible to open long positions. Otherwise, price fixation below this level and its bottom-up test will drag the euro further down to 1.0645 and then probably at 1.0603. At the level of 1.0645, traders will be able to go long on the rebound with a view to catching an intraday correction of 25-30 pips. If data on the Eurozone economy turns out to be better than expected, or ECB President Christine Lagarde said something new, the price will most likely consolidate above 1.0736 and test it from the top down. In this case, the volume of long positions will increase, allowing the euro to advance to 1.0775 and 1.0811. At the level of 1.0811, it will be possible to go short on the rebound. Short positions at 1.0775 can be considered only following a false breakout. The outlook for the British pound is not so bright. A false breakout at 1.2553 will create a sell signal. If the price fixes below 1.2511, the pound sterling will come under additional pressure and drop to 1.2473 and 1.2427. At the level of 1.2427, I recommend open long positions on the rebound, counting on the intraday correction of 25-30 pips. Long positions at 1.2511 and 1.2473 can be considered only amid a false breakout. I suppose bulls will make every effort to break above 1.2553. Thus, consolidation at this level may lead to a strong buy signal and a subsequent price return to 1.2596, for which a struggle is unlikely to unfold. As for the short positions on the rebound, I think it will be a wise decision to sell the pair at 1.2643 with a view to catching an intraday correction of 25-30 pips. Good luck.